In this video, we're going to talk about the recent occurrence in the markets where there was a huge dump in the price of several assets, especially crypto. Unfortunately, this resulted in a very widespread news article about a certain trader who was found in his Lamborghini unalived, let's say, unfortunately. What I want to discuss in this video is I want to discuss the reasons that happened, what caused the dump in the markets, and I want you to understand why there is so much barakah and good reason behind certain strategies and practices in the financial world and the trading world and investing world. There are certain strategies that are completely and categorically haram, and why there is so much blessing and barakah in those things being haram. First of all, I want to start off and discuss supply and demand. This is basic economics, very, very important to understand. We're going to go with the example that in the entire world, there are 100 mangoes, okay? It's currently mango season here. Cold mango cut up on a hot day is one of the most beautiful experiences that you can ever have in your life. I'm telling you from experience because that's what I've been doing over the last several weeks, almost every day, smashing a bunch of mangoes. But in this example, we're going to go with that there are only 100 mangoes in the entire world, just for this example, okay? The mangoes are currently selling at $1 each. On top of that, I own 50 of those 100 mangoes. Now, if I own 50% of all of the mangoes in the world, that makes me what we would call a whale. And it's very, very simple. A whale is a big fish in the market, someone who owns a huge percentage of the supply of what is available in the markets. Something that I want you to understand is that whales have it on easy mode when they are trading. When you're trying to make money buying and selling, trading and investing as a whale, you are living life on easy mode. Now, typically in the real world, whales are people who own multi-million dollars of certain assets, of gold, of crypto, of certain stocks, etc. So to be a whale in the current world with regards to assets like that, you need to own multi-million dollar worth of those assets, okay? So let's go back to this example. In this example, as I said, there's 100 mangoes in the world. They're trading for $1 each. If you want to buy a mango, currently they're $1, okay? And I own 50% of the entire supply of the world, okay? So I'm a whale. I'm a mango whale, okay? I'm a big fish in the market of mangoes. Now, what happens if I decide that I'm going to sell my 50 mangoes? On a day-to-day basis, the buying and selling of mangoes is usually happening on a small scale. In this example, maybe there's 1 or 2 or 5 mangoes being bought and sold on a continuous basis, on a daily basis, okay? What if one day I decide I'm going to sell all 50 of my mangoes, okay? If that happens, suddenly the entire market in the world, if I own 50 mangoes, there is only 50 other mangoes in the world, okay? If I sell 50 of my mangoes, the market has been flooded with another entire 50 mangoes, okay? Which is going to cause the supply to go up. There's a lot more mangoes supplied in the market, and it's going to cause the demand to go down because people don't need that many mangoes on a daily basis. Currently, the price of mangoes is $1. I'm going to sell 50 of my mangoes. I'm going to sell them for $50. So I now have $50, okay? And because I've sold 50% of the supply of mangoes into the market, it's caused the supply to shoot up and therefore the demand to go down. When that happens, price goes down. Now, because I as a whale have sold 50 of my mangoes, the price might go down to around 50 cents now. So supply has gone up, demand has gone down, which causes price to go down. And then all I have to do as a whale is wait for the price of the mangoes to stabilize at 50 cents, and then I can buy another 50 mangoes with my $50. And this time, because the price is half of what it was when I sold, I can buy 50 mangoes for $25. So therefore, this is the benefit and why being a whale in the markets is like a cheat code. It's cheating the system and why it's so easy to make a huge amount of money when you're working with that level of wealth and money in the markets, okay? So in this example, again, all I need to do is continue doing that I can continue buying and selling because I own so much of the supply. Every time I sell, it's going to cause a massive reverberation in the market. It's going to cause a domino effect in the market. So carrying on in this example, if I buy 50 mangoes for $25, I've bought them for $25, okay, for 50 cents. But because I've bought 50 mangoes and the supply of mangoes in the world is only 100, I've suddenly taken away 50% of the supply of all the mangoes in the world, which again is going to cause the opposite effect to this. The supply is going to shoot down. Now there's 50% less mangoes available, which is going to cause the demand to go up. And then it's going to cause the price to go up again. It's like a vicious cycle. Therefore, buy mangoes, 50 mangoes for $25, then the price is going to shoot up again to maybe $1 or maybe a little bit more, and I can just keep on doing this. And that is exactly why being a whale in the markets when you're working with so much wealth is just like a cheat code. It's making money on easy mode. And that is essentially a basic explanation of what happens almost every time there is a major crash that is not caused by a significant otherworldly event, for example, COVID or the 2008 mortgage crisis. Those were caused by external events, okay? When you see major crashes in the short term, like happened last week, very likely it's whales causing these market movements. Whales live life in the financial markets on easy mode. Now, in the example of what happened last week and why people end up in the situation as that poor person, not literally poor, but poor in the fact that he was found unalived in his car and is very likely by his own hand, right? So in this situation, we're going to explain the game as three players. There's the whales, there's the leveraged traders. I'm going to explain what that concept is in a second. And there are the exchanges. Now, the exchanges obviously are just the places where you can buy and sell assets, okay? Where you can buy and sell gold, where you can buy and sell crypto, and where you can buy and sell stocks. Those are the exchanges. In Islam, there are several strategies that are categorically haram. They are impermissible for very, very good reason, and I'm going to explain them now. In Islam, one of the things that is impermissible is leverage. Categorically, there's no argument about this. Leverage is haram. Now, what leverage is borrowing money to invest. Leverage is when you go to an exchange and you say to the exchange, listen, I have $10. I want to borrow $90 from you, which is 10x leverage, and I'm going to trade with that total $100. After hopefully I've made profit, I'm going to give you your $90 back. The reason why traders mainly use leverage is because even if they only have $10, you can borrow money, say $90, and now you're trading with $100, meaning that the profits that you can make are much, much higher compared to the small amount of capital that you were starting with. Hopefully you can see some of the problems with this. If you are a really, really competent trader, which is actually only 3% of the most competent traders in the world, only 3% of traders in the world make profit. If you are of that 3% who is competent enough to make profit, then yeah, fine, you're making profit and you're making good money. If you are of the 97% who is constantly losing money from trading, then what happens when you leverage is, yes, you can make potentially 10 times the profit that you could have made if you were only trading with your $10. But if you lose money, then you are making 10 times the loss. Yes, your profit is potentially 10x, but your losses can potentially be infinite, which causes bankruptcy, which causes you to potentially lose all of your assets, which can cause you to lose all of your livelihood, and which causes people to lose all of their life savings, lose everything that they have. They can destroy marriages, it can break families apart, and it can cause unfortunate situations where you have young traders who, not nice to say, but they got a bit greedy, they got a bit overconfident, and you end up finding them in their Lamborghinis unalived, most likely by their own hand. This is the reason why certain strategies are categorically haram in Islam. Allah subhanahu wa ta'ala has so much wisdom and hikmah. He understands our psychology because He created us and He wants to protect us from destructive and demonic practices in the financial markets, like riba, charging interest and taking interest, and paying interest is all demonic. Leveraging, demonic. short selling as well, which we'll cover in a separate video. Just a quick side note before we continue the video, I don't know if you know, but we have two amazing resources in the comments and in the description of the video. The first one is access to my free online training. Now, both of these resources are only for individuals, for Muslims who earn more than 6 figures, or you're approaching the 6-figure mark and you need to know how to plan for your money, how to arrange your money, how to structure your finances, how to invest. These are very, very important things. How to structure your taxes so that you don't overpay. All of these things are absolutely vitally important, especially if you know that you're on track to making 6 figures, or if you're already making 6 figures. It's not too late, but you need to start planning and structuring your finances right now, okay? The time is going to get more difficult, and when tax season comes, you're going to have a massive bill. Please structure your finances now. Learn how to invest everything efficiently so that you're not facing big, massive tax bills, etc. And you know how to invest your money going forward. So the first link is for our free online training. As I said, only if you are on track to making 6 figures, or if you're already making 6 figures, and that is in the link below. And the second link is access to our free private community. Again, only for Muslims who are approaching 6 figures or more. That is there for you. Click below, get access right now. Assalamu alaikum. So in this example, you have whales, the people that control the markets, that cause these massive movements. Then you have the leverage traders, these very idiotic people that are trying to buy and sell on a regular basis, but they're not just buying and selling with their own money, they're leveraging. So they're borrowing huge amounts of money. Some exchanges, which is absolutely insane, will allow you to borrow 100 times what you're starting with. So if you come to an exchange with $1,000 of your own money, they will allow you to trade with $100,000 of the exchange's money, which is insane. So I'm sure you can imagine what happens if you lose money in that situation. You've lost 100 times the money, not just of your $1,000, maybe 50% or whatever. Let's come to essentially what happens on a regular basis in the markets, year on year, month on month. This happens on a regular basis, maybe every 3, 4, 5, 6 months, once a year. This happens on a regular basis. Okay, let's take this example as Bitcoin, just as an example. The price of Bitcoin is slowly going up. Slowly, slowly, slowly. Over months and years, the price of Bitcoin is going up. Now, at the first position is when the whales are going to sell. Okay, now remember, when a whale sells their supply, their assets, their Bitcoin, because they hold so much Bitcoin, it's going to cause a massive movement in the markets. In the market, there are 21 million Bitcoin, actually less, right? If you as an individual sell your $100 of Bitcoin, which is worth, what, 0.0001% or something like that, it's not going to cause any effect in the market because there's 21 million Bitcoin worth something like, I think, approximately 2 trillion currently. So you selling your $100 of Bitcoin is not going to cause any effect on the market. But if a whale sells, when they sell maybe 100 Bitcoin or 1,000 Bitcoin, it's actually going to cause a noticeable move in the market. So this is what happens. A whale sells a huge amount of Bitcoin, which causes a noticeable drop in the price. Remember, they are adding a huge amount of Bitcoin to the supply of the circulation of the world of Bitcoin. Okay, so there's a lot more Bitcoin in the supply. Supply goes up, demand goes down, causes the price to drop. Okay, now the smart traders, even if they're using leverage, they will use something that is called a stop loss. Okay, so they have bought Bitcoin on leverage. For example, they've got $1,000, but they're using 100 times leverage. So they're actually trading with $100,000 worth of Bitcoin. The smart ones will have a stop loss in place. That will prevent them making an infinite loss. And what will happen is the whales will cause the price to drop to the extent that the stop loss of these leveraged traders will liquidate. Now, a stop loss is essentially an algorithm that you put in place with the exchanges to ensure that you don't lose too much money. Okay, so for example, if I buy Bitcoin at $100,000, the value of one Bitcoin is $100,000, and let's say I buy one Bitcoin. So I've got one Bitcoin, it's worth $100,000, and I put a stop loss in place at $90,000. And what that means is that if the price of Bitcoin drops below $90,000, the algorithm will trigger and I will sell my Bitcoin automatically and I will receive $90,000. And the purpose of that is to prevent me making a massive loss. For example, if Bitcoin drops to $50,000, as soon as the price of Bitcoin drops to 90,000, the algorithm will trigger. I will sell my Bitcoin automatically. And even if the price of Bitcoin drops further, I'm not exposed to that level of loss. Okay. So the smart leverage traders will put a stop loss in place to prevent themselves making an infinite loss. And the reason they can make an infinite loss is because, remember, they're trading with 100 times what they actually own. The whales cause the price of Bitcoin to drop, and they keep on pushing and they keep on selling potentially until they trigger the position where the vast majority of these leverage traders have put their stop loss. Okay, so for example, I think maybe the stop loss last week was around 110 or $105,000. So as soon as the price of Bitcoin dropped to below $105,000, it triggered all of those stop losses, which triggered a huge amount more of selling of Bitcoin. So all of those leverage traders ended up selling their Bitcoin automatically, which caused a domino effect in the price, which caused a lot more selling and caused the price of Bitcoin to drop even further. Okay? If the whales sold their Bitcoin at, for example, $120,000, and the price of a Bitcoin eventually dropped to approximately $100,000, the whales are now in a very, very good position. And the smart investors like you or I, if you're intelligent and you're not a civilian, you can also take advantage of this, right? The whales now are taking advantage of the fact that Bitcoin has dropped to $100,000 and they are now buying at $100,000. They sold at 120. They caused all of this chaos in the market. They caused all of these leveraged traders to liquidate. And once the price had dropped to whatever level they were happy at, say $100,000, they were able to buy again and solidify a profit. And then the price of Bitcoin slowly starts going up again. And this is a summary of what happens regularly in the markets. When there's a massive crash in the short term, not even a massive crash, a short crash like this one, people were freaking out about it. But if you're a sensible spot investor, then you weren't panicking. You're like, oh yeah, I've seen this 100 times before, like our clients, okay? Because they're not civilian investors, they're competent long-term investors. If you are a civilian investor who doesn't understand how the markets work and you bought Bitcoin at $120,000 and then suddenly it's dropping and dropping and dropping, then you're going to panic.
Like, oh my God, what's happening? It's dropping, it's going down, I'm going to lose all my Bitcoin, I'm going to lose all my money.
Right? Because you're incompetent, because you're a civilian investor, okay? And then potentially you might sell because you don't have any idea what's going on. You might sell around here at $110,000, $105,000 at a loss, and then the whales are going to buy again at here. This is a vicious cycle that civilian investors do all the time. I will go into that in a separate video. That's what happens on a regular basis. Whales are controlling the markets a lot of the time. They liquidate leverage traders because leverage is a crazy, very, very high risk strategy, which is categorically haram, and I wouldn't recommend for anyone at all. But how does it get to the point where you find a young trader in his Lamborghini unalived and most likely by his own hand? How does it come to that point? Most likely what happened in that scenario is, on one hand, you can borrow money, leverage from an exchange, which is a corporation, right? There's not really, obviously there's pressure because you owe that corporation money. If you lose money leveraging their money, if you take a 10x leverage or 100x leverage on an exchange, then you owe them that money. You have to find that money somehow, okay, obviously. On the other hand, there's a separate stress if you are managing other people's money. So on one hand, it's bad enough if you borrow money from an exchange and you leverage money using the exchange. On the other hand, if you are managing a fund, you are managing maybe hundreds of other people's money. The stress of that is on another level because you're not dealing with a single corporation like an exchange. You're dealing with the responsibility of maybe hundreds or thousands of people's money that you are responsible for. And if you are overconfident, if you're utilizing very, very high risk strategies like this, like leveraging on top of that, managing people's money, and you end up losing all of their money, can you imagine the stress that you would under? I think he maybe lost maybe 10 or $50 million of his investors' money, which obviously causes a huge amount of stress. He's thinking to himself, how am I ever going to make that money back? How am I going to pay my investors back? And it happens. And that's what we saw in the 2008 mortgage crisis. There are many, many traders on Wall Street that lost their entire livelihood, that were leveraged far beyond their capabilities. And, there were many self-deletions, people jumping off buildings and stuff. It's not nice, but that's what happened. And that is how you get to the conclusion of, finding someone who's self-deleted himself in his Lamborghini. What a horrible scenario to be in. But the lesson from this is that Allah subhanahu wa ta'ala has so much wisdom and hikmah that He has protected us from these risks of doing stupid, high-risk things that are going to cause damage to our lives by preventing us and forbidding us from certain practices like leverage. And the same scenario, the same thing could be said for alcohol and drugs and all of these things. Subhanallah. So, I hope that made sense to you. This was a simple explanation, hopefully simple. There's a lot of moving parts, but hopefully a simple explanation of what happens on a regular basis. So, inshallah, the next time that you see a significant crash in the markets that's not caused by an external event like a major worldwide pandemic or something like that, hopefully you'll be able to understand what's happening and you won't react like the other 99% of civilian incompetent investors. You're going to have a little bit more insight to understand that actually this is what's happening and I'm a little bit more switched on and I'm not going to lose money like all of these other civilian investors. Subhanallah wa bihamdi, subhanakallahumma wa bihamdika, wa nashhadu an la ilaha illa anta astaghfiruka wa atubu ilayk. And I will see you on the next video. Assalamu alaikum.